is Friday, February the 26th, 2016, and I have the great honor and pleasure of welcoming back to the show the founder and CEO of Sprott Asset Management, and that is Mr. Eric Sprott. How you doing today, Eric?
Hey, Rory, I'm doing well. We've had an interesting week. A little disappointed to see a little fade here on Friday, but lots of good things happening in the precious metals market.
Yes, there is. And I wanted to start with something that I believe is near and dear to your heart, and that's the silver mining. And with several of the primary silver miners reporting record production for 2015, especially the ones out of Mexico, Silver Standard, Hecla, a couple of the others as well. How much longer do you believe that this is sustainable into 2016, or is it at all?
Well, I would guess that all mining production of precious metals, and for that matter, any metal, will decline in 2016. I can speak more to gold and silver. I know gold came down some small percentage in the fourth quarter. As we all know, the money being invested in exploration and development has come off here. So I would certainly think that production is likely to go down. And notwithstanding what might have happened, I think Mexican production actually in the whole is going to be down last year. You know, the U.S. production is down, Canadian production down. I think silver production, when we finally get the numbers for 2015, we'll find out that it was down year on year. And I suspect that we'll find out it's going to be down again in 2016 as the year unfolds, and we realize that not too many new operations are opening up here. So I think from a supply point of view, both in gold and silver, 2016 looks to be a real positive year on the supply side in the sense that we'll get less supply than last year.
How are they going to be able to manipulate the price when the product is going away and the demand is going through the roof?
Yeah. Well, you know, it's a very interesting conundrum, but it's not one that we haven't faced before, Rory. You know, my view has been that for a number of years now, that the physical demand that we can see has always been above the mine and scrap supply, and that the difference was made up by central banks leasing their gold out, so they don't actually say they're selling it. It still shows in their balance sheet as gold, even though it's leased out, but it has made the difference. And as we look at markets here in 2016, we've had some stunning numbers, if we're to believe the ETF numbers. And I know so far in February, I mean, we've added something like 160 tons so far in February, and I think we're at something like 240 tons, or maybe 220 tons through to earlier this week. And I kind of look at and the one thing I'm a little concerned about, I just don't know whether ETFs really do get the gold. Like I'm a little bit from Missouri on whether the gold ETF, the GLD, actually receives the gold, or they get a promise to receive the gold. But let's presume that they do. I mean, we have so far had about 100 tons a month of gold coming into the world's ETFs. If I can annualize that, it's 1,200 tons of gold purchases this year just for ETFs.
Wow.
And last year, they sold 138 tons. So you have a total delta there of 1,338 tons in what's a 4,000-ton market, which was in balance last year. So where do you come up with an extra 1,300 tons to satisfy that one change in demand, let alone the fact that coin sales are exploding, and there's obviously people are buying bars. You can just feel what's going on the gold arena outside of ETFs here. So in my mind, the physical numbers are absolutely stunning so far this year. And to your question, you know, how they're going to keep it down? Well, of course, they can keep it down by issuing paper on the various commodity exchanges, particularly COMEX, and people not taking delivery. But the amount of tonnage left on the in the COMEX is like, I think it's 8 or 9 tons, 9 tons, 9. We had 2 days this week when the ETF added 19 tons in a day. We got a total of 8 tons sitting in the COMEX that's registered and available for delivery. So sooner or later, it's going to spill in there. I look at what's happened, not so much this week, but today, that it's come off here on Friday, that they're setting it. The LBMA, I think, is probably even more egregious in some of its pricing actions than the COMEX is. Well, we got options expiry on the LBMA on Monday. I really do believe that after the silver market here, it's had by far a bigger decline than gold. Because the position in silver is somewhat untenable. Like we have 800 million ounces short on the COMEX. God knows what we have short in the option markets over in Europe. And meanwhile, we get in the COMEX, we get 25 million ounces of silver available against an 800 million ounce short position. So I believe that the commercials do maneuver the price down to where the option buyers, have max pain. There's a theory, and it closes at max pain. And here we have silver down well under $15 here, and I would have guessed that, where is max pain? Max pain is probably about 14.75, something like that, where all the put and call guys end up losing all their premiums, and the commercials make them all. It's a bit of a game where they just sweep the table, every 6 to 12 weeks, just as the options expire, and they rake in the option premiums. So I think post Monday, things could be very exciting. We've had lots of positive news, both on the silver front and on the gold front. And perhaps one of the things that people should reflect on here, so many different either technical guys or gold experts at various banks have now come out in favor of gold, including some of the bigger banks. And I always find it almost hilarious that the amount of gold that's available each year increases by approximately 2,700 tons, which is the amount mined. You can't count recycling because it already existed. So you get 2,700 tons added to a total of 175,000 tons that already exist. I mean, it's only a 1.5% increase. So, if let's say people own 1% of gold in their portfolios, it can only go to 1.5% the next year. There's only 1.5% more gold. So all these people are saying, well, increase your weighting in gold from 5 to 10 or 10 to 20. But that is absolutely impossible to do when there's very little increase in supply each year. So
exactly,
with all these new entrants coming into the market, like we're all trying to fit through a very, very small door here.
Yes, I know that's right. I mean, we were looking at some numbers similar to that, Eric, just the other day, and I was speaking with Dave Kranzler about it, and he was saying, if it goes up, if the current demand goes up from just under 1% to 5%, and I said, no, if it goes up from just under 1% to 1.5% of investors, then we have an issue. We have a major issue.
Yeah,
and
there's no doubt mathematically, Rory, you're absolutely correct, right? I mean, to go from 1 to 1.5, you need 50% more.
Exactly.
Well, we produce 1.5% more a year. You can get 50% more by having the price go up by 50%. That's the only way you can do it, right?
Right.
There's a very, very small amount of new gold added every year to the investment pools that people can put their money in.
Now, as far as how does that play out in your mind, Eric, as far as, or according to your analysis, I should say, with silver, because silver, as you well know, it's not hoarded in mass. The majority of what's mined is used. So if it's used and we use the same numbers that we were just discussing, we go from 1% to 1.5%. What happens to silver at that point? I mean, because there's nowhere to go get it.
Yeah, I agree, Rory. I think silver is the dark horse here, and because of the positioning of the commercials. Two, the fact that, as you say, most demand is industrial. When I look at the $8 billion that's gone into gold funds this month, I mean, you couldn't begin to get that into silver in a year. So, it's only 25 million ounces of silver available in COMEX. I mean, that's worth maybe $400 million. You'd clean out the COMEX.
Wow.
And most silver, well, I don't even think 20% of silver is available for investment. So that's 160 million ounces a year. That's not a lot of money.
No, it's not.
When you compare it to the amounts of monies, floating around in the world, it's a very, very small market. So I think when the shortage happens, and maybe when people, maybe some people shift from gold to silver, silver is going to way outperform gold here. Every time I have to look at the U.S. Mint's gold and silver sales, so far this month, I think gold sales, they'll probably end up about 90,000 ounces, something like that. And silver will be pushing 6 million ounces. Well, that's a difference of over 50 times more silver is purchased than gold. And yet it's produced at an 11-to-1 ratio. And most of the silver produced is not primary, it's for industrial demand. So, I mean, the ratio of what's available for investment is probably like 1 of every 5 ounces, or it's probably 5 ounces of silver versus an ounce of gold. And but they're buying it at a rate of 50 to 1. Well, that can't carry on.
No.
We're going to run out of silver. And as you very well know, I mean, essentially the mint is restricting silver sales already,
Exactly.
right? And they go at a very, very slow pace. And but I think the demand's there. The logic is there. I think that's the most important case for us. The logic for owning precious metals in zero interest rate or negative interest rate, banning of cash, levered banks, bank stocks, losing massive amounts of money. There were 3 bad reports this week. One was Royal Bank of Scotland today, Standard Chartered the other day, and HSBC the day before that. They all lost huge gobs of money. Plus they're levered. So I just think that the demand will continue to come in here. And notwithstanding what the commercials try to do in the paper markets, honestly, it can't sustain itself on a long-term basis. There's just no way that we will deplete those inventories in those exchanges.
Yes, we will. And I want to stay with this for just a minute, but I've got a question on cash and the cashless society. But on January 28th, we witnessed one of the most blatant acts of fraud in recent memory when the silver fix broke. It literally broke, and there was an 80-cent difference between the futures cost and the spot cost. And what are your thoughts, Eric, on the silver fix collapse that happened that day?
Yeah, sure. All I can say is that somebody just rigged it, right? Somebody obviously had some option contract that was maturing that day, and he had to get the price down to a certain level so he could cause his client to lose money and him to make money. And it was just egregious what happened, and there was no explanation for it. I mean, it's like being in fantasy land. It was so surreal, 80 cents away, but 5% away from the market. Like, what the hell is going on here?
Exactly.
And ultimately, I'm glad to see some of the producers were complaining. In fact, some of the producers quit the LBMA. I think there were 4 or 5 major producers just outright quit the LBMA because it's rigged, and it's just amazing the aggressiveness and greed and just willingness to throw caution to the winds and just at their whim make the price whatever they want to make it. And nobody, and there's no reaction amongst the regulators or the exchanges, anything like that. It just sort of, look, just another day in space here. But I think it's symptomatic of, in my mind, it's more symptomatic of the short position in silver, that somebody had to get at the price at that level that day to avoid a major loss. But that can't, you can't keep manipulating markets like that when the underlying physical data is so overwhelmingly supportive of prices going up.
Yes, I would agree with that wholeheartedly. And will we finally see the Shanghai futures market come online on April the 9th? And if so, what does that mean to the coordinated fixes on the COMEX and LBMA, especially in light of what we were just talking about?
Yeah, it's a very difficult question for me to answer, Rory. I just don't
Okay.
know what happens in those markets. You know, the new ADX market opened up. I think it was a week ago this Wednesday. I don't see the data yet, and it was supposed to have some impact on pricing, and may very well have had an impact on pricing, but it's not something that I can measure yet.
Okay.
I mean, obviously, as you well know, the gold market is in Asia for the most part.
Yes.
Although it's kind of shifting here now with the kind of tonnages that theoretically being bought here. I mean, these are massive tonnages. I mean, there's hardly. I mean, yes, sometimes China can import 200 tons in a month, which is a very, very, very big month. Well, you know, the ETF's doing almost 200 this month, almost makes those two markets the same size here. And of course, India can be counted on for their 100 tons a month or something a little less than that every month. That's where the real market is, and I hope that the reality of the physical markets comes to bear. But I don't really, I can't give you a professional opinion on it because I'm just not. I don't know the intricacies of the market yet, and you have to see it play out. And a lot of these promised exchanges, you know, they say they're going to happen, and then they somehow seem to get delayed. So I don't think we have to rely on those markets to know that there is a shortage developing here. You just can't just look at the ETF stats. You know, where is this gold possibly coming from? You know, it has to be coming from central banks, and of course, one day, because it's been happening for so long, you're just going to say, okay, the gig's up here. Everybody's buying gold, and we're not going to win this, and away she goes. So that's what I'm hoping for. That someday, you know, they just throw in the towel and say, we're not going to supply this market anymore. We got to let it go.
We're all waiting for that day. And as we've
been waiting a long time for that day.
Well, then that means we're another day closer.
We are indeed.
And Eric, we were talking about the cashless society just a minute ago. You had alluded to it. And as we've seen the past couple of days, the Japanese have been hoarding cash. They've been buying all the safes that they can get their hands on and stashing cash at home.
Yeah.
And if someone holds physical gold and silver, does a cashless society matter? And should we be concerned about the government eliminating hard cash?
Well, in a way, Rory, you know, it's quite a positive for us in the precious metals area, right? Because it's a choice of two things: taking the cash out of the bank, which you should have done anyway, because the banks are very risky places that you should have your money, and you're an unsecured creditor. So I would never recommend having money in a bank anyway. And if you can, you know, put it in a safety deposit box or your own home safe, and fine, go ahead and do that. But of course, the offset to that is most currencies in the world are going down in value. So if you're in one of those countries, do you really want to own the cash? Because its purchasing power is going down all the time. So I would think that would cause people to reflect on owning precious metals. And as we discussed, it doesn't take much of an increase in buying to really exacerbate a shortage, right? You can't just imagine the size of bank deposits versus the size of the gold market. I mean, the gold market's so minuscule versus bank deposits. You could see, you know, just a gigantic rush to own gold, particularly if we can start putting in some upward bias in gold here in the short term, because everyone's memories date back to the last 4 years, and they're forgetting the last 6,000 years.
Right.
And of course, they're forgetting the 11 years before that, when gold went up by over 500%. It's all sort of a distant memory, it seems. I always ask people to think, you know, if you're out in your backyard and you discovered something that someone buried 100 years ago, and he buried some notes, some fiat currency, and the second he buried some gold, I will guarantee you the gold will have gone up by, you know, 10, 20, 50 times. Of course, the money's still only worth what the money's worth. And It just tells you what the passage of time does to fiat currencies. I can't believe that people don't learn from history in a way, but all fiat currencies have ended up being valueless. And I think it's safe to say we can look at the world today as logical thinkers. This stuff's going to end up being valueless too.
Yes.
All these countries are broke.
They're all broke.
They're so verifiably broke that why would you trust the currency of the country? So it's frustrating that it hasn't evolved quicker, but it's all going the same way.
Well, for me, it comes down to, do you trust the government? I mean, and if anybody says yes, then I'm sorry.
Yeah, I always look at that equation of government equals trust, and then you put the line through the equal sign.
Exactly.
Who would trust the government?
I mean, because that's what it comes down to, isn't it, Eric? I mean, do you trust the government to handle your currency?
Yeah.
I don't. I mean,
yeah, and it's not even, people might think, well, how can you not trust people? But it's the fact that the government and the U.S. government might be the most egregious example of this, is they understate their liabilities, right? They don't say that they're not going to be paying Social Security and civil service pension fund and nada. But they can't. I mean, mathematically, it's going to be impossible for them to make these payments. And, we saw last week that 400,000 members of some union are being informed that their pensions are going to be cut by 50%.
Exactly.
Well, you know what, Americans? Get ready for it, because it's going to happen with Social Security too, and lots of corporate pension plans.
Yep.
But we don't want to deal with what we can see in the future, even though we can see it very clearly.
Well, I mean, look at Detroit. What did they do to their pensioners?
Look at Detroit.
I mean, it's terrible,
Totally.
I mean, and that's just a small sample of what's coming on a national level. Period. It has to, because there's no funding for it.
No funding, and imagine the returns this last year and this year. You get treasuries yielding nothing. Now all your corporate and high yield bonds have gone down in value sharply. Stocks are down. What's the return going to be in a pension fund this year when you bogey 7 or 8%, and you come out and you make nothing? It's massively increases the underfunding. So there's just no solution to it. There's no mathematical solution. It's the most predictable thing in the world that there will be a failure to deliver on the promises. So, and that goes to the trust, and nobody talks about it. It's right in front of our eyes. It's like the elephant in the room. Nobody notices it, but it's right there.
It's that giant gray thing.
Swinging his trunk. Oh, it just hit you. Oh, did you notice it? No, I didn't notice that.
Oh, last question, Eric. Then I'll let you get back to your morning there. And are central banks out of ammo, and are they losing control?
Well, I think it looks like they are, really. And I find it so ironic that the Japanese central bank, that they go to negative interest rates and their yen would weaken and their stocks would rally, and exactly the opposite thing happened. I mean, it was so in your face.
So in your face.
That they thought it would be a constructive thing, and it ended up being destructive. And of course, from a logistical point of view, you go to negative interest rates. How do people create wealth? You ask people to save all their lives, and now they're going to tell you, because you're a saver, you're going to pay in more every year. I mean, it's so cockamamie that it's hard to believe we've gone here. And I think, to the point of your question, the central banks are desperate to do something. They think they can change the economy of the world, and in some ways they can. So, for example, when rates go to zero, more people can afford to buy a house, more people can afford to buy a car. But hey, once you get to a certain level, you can't bring the last sucker in, right?
Right.
And you've got everyone loaded up to their gills. Their monthly paycheck is almost totally allocated before they even receive it. And at that point, you have no buying power. They keep trying, but it's not working. And I would say that what the central banks have done is they've sustained the economy by low rates, but there's been no growth whatsoever. And now that rates can't go any lower, I think the gig is up here, and we'll see what will happen to the economy. We have so many bad reports recently with the services index contracting and house sales down 10%, and all the CEOs or the consumer confidence going down, the Bloomberg Consumer Comfort Index going down, people's paychecks not going up. I just had to read that in Japan, the unions have decided they wouldn't even ask for a pay raise this year because of the difficulties in the Japanese economy. So, and of course there is inflation, which is most people would suggest there isn't, but there is. And the policies, to your question, I believe are failing here, and more people realize it every day. So we have no way of sustaining ourselves without fiscal policy, but we can't have fiscal policy when the deficits are as high as they are. So I think we're kind of at the end of the rope in terms of getting the economy to what's the word?
Respond.
To breakout speed. To some kind of breakout speed. There's some word to use that, it's going to get a certain volume. Well, it's not happening, so we shouldn't hold our breath on that one.
Well, I mean, we could almost argue that not just the U.S. economy is in contraction, but the global economy is in contraction. If you look at certain indices, and one of my favorite is the BDI, along with the Shanghai Containerized Freight Index, those things fell off a cliff about 14, 15 months ago. They've never recovered. They are a great indicator of manufacturing because it represents raw materials and finished goods. And if you have no raw materials moving and you have no finished goods moving, then what have you got? You got nothing. So,
yeah,
I mean,
you're absolutely right, Rory. I mean, the worst data is the data out of Asia. When you look at Japanese imports and exports and Chinese and South Korea, they're all down double digits.
Exactly.
I mean, it's just a mess over there. And that's not a recession, by the way. That's almost a depression. So it's just not happening. And how can anybody expect to ship more into the United States when people's incomes don't go up, but their expenses do go up? Notwithstanding the CPI, I don't believe the CPI for a second, but everyone's costs are going up, but their wages aren't going up, so you can't buy more goods. Plus, you're tapped out on your credit lines.
There you go.
So it's not good economically, which feeds into, of course, the concern in the banking area, right? That you have borrowers who might have a very, very difficult time repaying, and all the more reason for depositors to be concerned about some potential future bail-in and get out of the system and get into your own gold and silver where you're now the counterparty instead of some bank being the counterparty.
Be your own central bank.
Be your own central bank. Yes, sir.
That's it. Well, Eric, I think that's a fairly positive note for us to leave everybody on. And we've been speaking with Mr. Eric Sprott, who is founder and CEO of Sprott Sprott Management. There's a whole list of Sprott companies that he is in charge of. And Eric, I certainly appreciate all your time today.
Well, Rory, it's always enjoyable. And, I've always been thankful of the work that you and others do in this area because someone has to put the facts on the table and give people the proper advice. And I'm sure, in the medium and long run, owning precious metal, even going back 10 years ago, is the best investment of all time. And it still is in my mind. And we're going to see a lot more of that action this year.
We certainly are. I would agree with that wholeheartedly. And Eric, look forward to speaking with you again in the not too distant future. And you have a wonderful morning.
Okay, Roy. All the best to you.
All right, buddy. Bye-bye.